It's time to check out market sentiment, and for the stock market, anything bad that happens in the world, what happens? The bears ride the bulls, and the stock market absolutely drops its load. But what happened in the past 24 hours? We've seen the main markets do really well, with the exception of oil and gold. I'll get into explaining what's going on in there. We're in control, but the bulls have made a comeback. The news headlines across financial markets: Israel-Iran conflict to wind down, an expected de-escalation. Just yesterday, we saw news headlines of the US potentially getting pulled into the war. People are now wondering what the heck happened to oil. Oil is an incredible proxy for tensions in the Middle East. If those tensions start to subside, we expect oil to go down. Oil spiked like hell recently because there was a possibility that Iran would block off the Strait of Hormuz. Literally, 20% of the world's oil passes through that strait. Therefore, any conflict in that area is going to push the price of oil way up. Typically, people get into financial markets and they are absolutely and utterly dependent on the news and signal groups. If the signal comes out red, they sell and they get pretty angry about it. If the signal comes out green, they buy and they're elated. This is an absolutely crazy way to trade and invest. Instead, you need independence. When you get up to structural resistance, sell. When you're at structural support, buy. Understand intercorrelation and interdependence, the paths and the cheat sheet. And well done to everybody who commented on yesterday's video. Such talent coming out. I'll cover that off later. For example, we got the green light on oil. It just went absolutely parabolic, but it went through so many CTKS levels that it was a big problem. A CTKS level is where the algorithms will kick in and interact with price. The more you pass through to the upside, the more probability of a pullback and a retracement. This is simply because things get overextended in one direction and then pull back. It's exactly the same in the opposite direction as well. These big spikes in price are caused by panic. After panic comes the process of normalization. If you're keen on oil, you need to be very aware that the $75 per barrel mark is extremely strong. Looking through social media, we had some commentary on the S&P 500, gold and Bitcoin through major geopolitical events. And what we can see is that it's pretty mixed, but Bitcoin has done rather well. A lot of people turn to the news because they want certainty. How do you get certainty out of this? New York factory activity contracts while the outlook improves. AKA, what could price do today? It's really difficult to read news headlines and view social media with any signal. But that doesn't stop us from trying, and we can see actual inflation according to reported inflation. It's always the way. The Fed is likely to keep interest rates on pause. A lot of people are expecting the money printer to get going, but hey, not so fast. The probability is a 96.7% probability of nothing. No change. But that probability over time is starting to increase. So towards the end of the year, we do expect a Fed rate cut. Even Polymarket is saying the probability of a Fed decision in June to cut rates is, non-existent. They're putting a no change percentage at 97.5. But we don't need to look there, we just look directly at the stats. Happy Father's Day to our US CTKS Global family. There was a really interesting meme I picked up, and it says, "Dad, I have something important to tell you," and Dad sends back this, "What the heck is that?" And the son says, "Hey, what is that?" And in typical dad joke fashion, Dad says, "I'm all ears," and that is the picture for all ears. If you're liking the content so far, please smash that like button and don't forget to subscribe. We have the best community on YouTube. Some other random things that were floating around social media, they will always find a way to print more money. So therefore, what's the solution? Of course, we need more Bitcoin. And Michael Saylor just acquired 10,100 Bitcoin at a mere $1.05 billion. And it's no question that MicroStrategy, which is now called Strategy, has done very, very well. And Michael Saylor predicts Bitcoin to be $13 million per Bitcoin in 20 years' time. Ay caramba. Now, if that does happen, Michael Saylor's company will be sitting on an absolute fortune. He's already got $62.09 billion worth of Bitcoin. And it's been growing very, very steadily. Or some might say exponentially. Michael Saylor certainly has done very, very well. Another thing that was floating around social media, don't look at the all-time highs, look at the yearly lows. Not a bad piece of analysis, actually. And what about Bitcoin monthly candles? Yeah, they do look good. It really helps where you pick the starting point. If you know what I mean, please let me know. Inside the masterclass, I talk a lot about representation of data. In other news, Metaplanet for Japan, from Japan, issued $210 million to buy more Bitcoin, and they purchased 1112 Bitcoin to bring their total holdings to 10,000 Bitcoin. And Metaplanet has some big goals in mind. They want 210,000 Bitcoin in their corporate treasury. A lot of people still think that Bitcoin is a Ponzi, it's all sorts of things, but when you compare the total transaction value in 2024 from Visa and MasterCard against Bitcoin, well, it's doing pretty well. But of course, Bitcoiners are in it for the technology. And Charles from Ada Cardano is seeking to put 5 to 10% of the Cardano treasury to build a Bitcoin and stablecoin basket for yield generation. And this was also floating around social media. We can see Bitcoin and traditional assets. Bitcoin has done, yeah, you could say reasonably well. Gold has done pretty well. The S&P 500 has done, yeah, not bad. But Bitcoin tends to take them all out, mafia style. Also, this one was circulating around. What's a Ponzi scheme? US national debt. You are here. What is not a Ponzi? Of course, Bitcoin, and you are there. In the financial press, gold was flirting with record highs. We'll look at gold's interaction with that shortly. And I also thought you'd like this government debt around the world. This is the debt to GDP ratio. Good on you, Sudan. You've done really, really well. And it's a little bit like Where's Waldo? If you can spot the Aussie or AUD circle, please let me know what the percentage is. When we look from 2021 in terms of Bitcoin and gold, the ratio to both, we can see that Bitcoin has been outperforming gold. But the gold community was quick to react. At least over the past 5 days, gold has been doing better than Bitcoin, despite the fact that this is actually old data. But it does circulate on social media. This was also making its way around social media. Bitcoin price performance since cycle low. Now, what does it tell you how we're doing right now? Well, it tells you that we're on par. On par for what? Where's the rest of the data? And you might notice something else. The 2022 plus cycle, 2018, 2015 to 18. So we got a blue line, that's that one. We got a green line, that's that one. 2022 plus cycle, we've got this one. This has no forward-looking capability whatsoever. You need to be really careful how you interpret data. This was also circulating in the past 24 hours. What we can see here is a Bitcoin 200-week moving average heat map. When it gets really, really hot, it gets red. And what do we notice? It's not really hot at all. Now, what does that mean? It means that potentially we could have one of these things following. And when we looked across social media yesterday, that's all we could see as far as the eye could see. I thought this was pretty neat as well. Bitcoin long-term holder net position change 30-day summation. You can see all of this green here, all of this green here, all of this green here. What happened when we got that green? We were basing and took off. What about here? We were basing and took off. What about here? We're not really basing, we're going up. But does it mean we could take off? Yeah, of course, it does mean that. But it largely depends on what happens next. What you're going to find is everything is structure. These charts and analysis, they're really good, but structure is the dominant. It's the ring to control them all. Okay, into the next section. Here we can see something pretty much on par with the last analysis. Look at this, these green bumps, these green hills. What do those green hills accompany? Well, they accompany the top of cycles. This is pretty good stuff. But you might remember back to 2021, if you're around. That was a 50% drop-off, people. That was the China minor crisis, and it was one heck of a headache. Now, what do we see here? Lots and lots of red. Lots and lots of red before the green. And what could be coming next? Yeah, it could be. But remember, structure still controls everything, as does intercorrelation and interconnection, but quite an interesting analysis. The good thing is that crypto is not stressful. Some more things floating around at the current time, a golden cross and another golden cross. Oh, what happened after that? Oh, it's a pre-drawn conclusion. Bitcoin crypto are going to go parabolic. I'm just kidding. All you need to do is to watch structure. Some other interesting analysis came out: buy 500 days before the halving and sell 500 days after the halving. This kind of buy-sell, well, it's pretty interesting stuff, but it actually relies on everything repeating exactly and precisely. Don't forget that this pull down right here was in excess of 50%. We're getting some other signals. A Bitcoin hash ribbon has just printed. This is literally about miner capitulation and miners coming back online. The miners secure Bitcoin's hash algorithms and security. So when we get more and more miners, that's a really good thing. But when the miners go bust, that's not such a good thing, especially for the miners. And we had another person post this out: hash ribbons and volatility. We've seen another one, another buy signal. Fantastic. One thing to note, these are in excess of 80% drawdowns. I think some sell signals around here could be a pretty good idea. And this interesting analysis on Bitcoin peaks also came out in the past 24 hours. In tomorrow's video, I'm going to go through one of the best top signals you can possibly get for Bitcoin. I look forward to seeing you tomorrow in that episode. Okay, let's continue on. It was a pretty interesting chart about Australian median house price in terms of Bitcoin. And just going back to 2014, you would need 3,374.17 Bitcoin to buy an average median house. Now you only need 5.14. Makes you feel really sorry for that guy who spent 10,000 Bitcoin to buy pizza. There was also some really interesting news on the stablecoin market. People are starting to figure out that stablecoins are the way to go, and traditional finance is getting in. There was also some interesting stuff about adoption. Currently, we're at 3% adoption in 2025. Things haven't even started yet. That's like literally the internet in 1990. I actually ran an internet service provider in 1993. So I kind of understand that inside the internet at that time, 3 years before I did that, yeah, there wasn't much cooking. And another post came out with this adoption, 4.7%. Now that is pre-2025. It's very important to look at the dates on the axes. And this was also some pretty analysis. What we've found with Bitcoin's price as it goes from inception around over time is that it hasn't crossed backwards at least not yet. Also, some of the usual standard things: the US dollar is your money divided by infinity, and Bitcoin is your money divided by 21 million. Because that's the supply of Bitcoin, it is fixed. Some other things about house price. So, median home price, US dollars versus Bitcoin, values in June of each year, 2012, 2016, 2020, 24, and 2028. Oh, nothing like an estimate. And when we look, 0.4 of a Bitcoin to buy a house in 2028. And somebody else posted their analysis on the same thing but with different numbers. And look at little CZ here. Oh, he's so young. He sold his apartment in 2014 for 1,500 Bitcoin. His mum called him a stupid kid, and that Bitcoin is now worth 167 million at the time of that snapshot. And now what are we looking at here? 2012, 2016, 2020, and now. I wonder if this comes next. In yesterday's video, I asked a question about the US markets and Bitcoin, and CJ came back with something really good. The intercorrelations between the US markets and the global markets are critical, as the US, as the world's largest economy, significantly influences global financial dynamics. Spot on, CJ. USA market trends set a directional tone that cascades to international equities, commodities, and currencies. Absolutely. This influence extends to Bitcoin, which as a risk asset often mirrors USA market movements, particularly during periods of volatility or economic shifts. Subsequently, Bitcoin's price action heavily impacts alts as their valuations are tightly correlated with Bitcoin's market dominance and sentiment, amplifying the USA's indirect but profound effect on the broader crypto ecosystem. Well done, CJ. We have a couple of rules that can absolutely help you to understand what CJ just said. No alt can escape Bitcoin's gravitational pull. Now, what does that mean? If Bitcoin is going up, the gravity of Bitcoin going up will pull the alts like Solana, ADA, XRP, Doge. You just pick one, they'll come up. Now, if it's going the opposite direction, that also happens. If Bitcoin is coming down, your alts are not going to survive that gravity, that negative gravity. But we also have another rule. Bitcoin cannot escape the US market's gravity. And what we've found recently is Bitcoin sniffs out gravitational weakness or strength inside the US market before it occurs. Fantastic stuff, CJ. And Sanjeev said, Bitcoin being very risk sensitive, and this is a very important point to note. I said that you could look at the US markets through Bitcoin. You can actually look at Bitcoin and know what the major market indexes are doing from a directional stance. That's because of that risk sensitivity. Also, it trades 24/7. And it gives us a heads up to show where the major markets could go when open and of course when they're trading as well. Anyone trading the stock market should definitely keep an eye on Bitcoin's directional movement. Very beautiful. Thank you, Sanjeev. Before we get into Bitcoin structural levels, just a quick primer in case you're just new to the community. If you are, a very warm welcome. Now, one of the things, these CTKS levels, also called Stanfield levels, they measure where the algorithms will come in and seek to push price down. These mean if price is below here, this is a positive CTKS gap, so it can be really explosive. And we saw one of those inside Bitcoin's price action in the past 24 hours. It literally rocketed up. Remember, 48 hours ago, the bears were ripping into the bulls. The bears had control. And then we saw that positive CTKS gap. Bitcoin absolutely exploded. I'll show you the chart momentarily. But the thing to realize is that gravitational pull can push price down. So just like we saw with oil, when something explodes up, it does decay down. These are things that you must be aware of. Understanding positive and negative CTKS gaps is vital to your economic health, as is the strength of different levels and how spaced out they or how far apart they are. There are lots of free resources at CTKSMethod.org. Be sure that you check them out. Okay, looking at Bitcoin on the daily basis, Bitcoin was down here. It was looking very, very weak, and then things started to turn around. When things start to turn around, you must go with the flow. It's a very important thing. And what we saw above that 106,100 mark, Bitcoin absolutely took off. And at the time of this screenshot, it was 108,729. Just bear in mind, there is now a lot of overhead structural resistance that's going to whack Bitcoin, and of course the alt market in the head. It's really important to know where structure is, especially to know where the gaps are as well. Now you can see in the past these positive gaps can be overshot, but this was a very different scenario. We were coming up and up and up and exploded. This one is slightly different. What we're seeing here is that we've been basing and we've come up. Now, if we get above that 109 level, we could end up consolidating around here for a little while. Could we explode up and through the 110? Yes, of course, anything is possible. But just realize, after a big move up, typically you get a wick down before it continues as well. This is absolutely normal stuff. This is actually the progress of Bitcoin throughout the past 24 hours, coming up into that overhead structural resistance just a little bit under 109,000. Now, what causes this up and down price wave behavior inside Bitcoin? If you've done the profiting course, you already know that all charts are intercorrelated and interconnected. You cannot just look inside or at one chart in isolation, because you'll wrong foot yourself. What we need to do is to look at total crypto market cap, and coming up through these levels, price was doing things like this underneath this candle. Total crypto market cap and Bitcoin structure intercorrelate and interconnect, and we can see that these structural levels have been very profound for the entire crypto market in the past 24 hours. This is precisely why Bitcoin did the way, well, it moved the way it did because of total crypto market cap. Ken, are you saying that you can look at structure and not worry too much about the news? Yeah, you got it. Precisely, you definitely can. We know that the stock market came up really well, and Kacharia said Bitcoin is a risk-sensitive asset class. Thus, an up and down move in Bitcoin can help us indicate a possible up and down movement in the stock market for all markets because they're intercorrelated and interdependent. You got it, my friend. Well done. And Dinesh said, knowing intercorrelation and interconnection is really important. And he also said Bitcoin price action is the early warning directional indicator, especially over the weekend when the rest of the markets are asleep. Hence, positive momentum inside Bitcoin typically implies positive momentum inside the S&P and other major market indexes, as well as indexes in other countries. For example, the Australian index, the ASX. Absolutely spot on. I'd just like to thank everybody inside our CTKS Global family. You're just awesome people. I'd just like to also show you something pretty interesting. When you look at Bitcoin, you can see the 12th, this particular price action. So Bitcoin has come up and just erased all of these negative days so far. So just keep in mind this particular point. You can see an explosion. One candle can't figure out what it's doing. It's looking like it's rejecting and says, nah, I can't stand this structural overhead resistance. I'm out of here. Now, when we look at Ethereum, you can see that explosive action here, and ETH is getting above. It's showing a degree of strength right now at the current time. A lot of people, when they see big green bars, they're going to say, it's fantastic, the news is positive. Of course the news is positive because the candle went positive. What are they going to put? Doom and gloom? No, they're not going to do that. They have to reflect what happened. But what happens when it goes red? When it just does a natural decline? Because this is just price moving in a wave. It's just always doing things like that. They'll go sell, it's the end of the world. Just beware. So what we want to do is to become independent from all of these news and signals and other rubbish that's floating around there. You want to become an institution of one. Why? Because your finances depend on it. You want to get to a point where you can read across the charts, understand how they relate to your money path, have a three-dimensional strategy, and understand how all the charts connect to each other, because they do. And of course, the foundation is to know where structural support and structural resistance are, especially the gaps. So let's turn on the structure for Ethereum. We can see in the past 24 hours, we got up to this level of structure. Look how structure just pins everything. It is unbelievable. If you want pure power, this is the way to get it. You'll actually know how price is interacting with structure, if it's getting stronger or if it's getting weaker. You'll understand where the algorithms are going to step in and buy and step out and sell. This particular price action here, look at how it just rose up to here and then just flatlined at the 2640 mark. Why? Because there was structural overhead resistance there. This is absolute gold for you to know and to have. And you can pick up this indicator from CTKSMethod.org. What about Solana? When Solana got through that 153 or 154 area, it was looking pretty good, but it just kept on hitting structure at the same time. Even though Bitcoin had just exploded up, the alts have been very, very tentative so far. We can especially see that inside the memes like Doge and Pepe. The crypto market is incredibly volatile. It's not anything like the stock market. But just think about it a different way. Inside the stock market, you need to use leverage. And leverage means that you can turn $1 into $1,000 very, very quickly, because you leverage up so much that a 0.01% movement against you will wipe out your entire account. Inside crypto, it's very different. It comes pre-leveraged. Very kind of them. I also said I would talk about gold. When you look at gold, we had that explosive price up through multiple structural resistance levels, which naturally creates a pullback. We got a degree of support, but then we've seen just recently, just above that 3444 is a level of overhead structural resistance that's been chaotic for gold, to say the least. Then we had a structural failure, another structural failure, another one, a degree of structure holding, and then a huge structural failure through a negative CTKS gap on our way back to 3378. So we went all the way up and all the way back. But you can see exactly what price is doing by looking at structure. This is the key. You don't need any stories, you don't need anything, you just need knowledge. Yes, something could go parabolic, sure, but if it can't get through overhead structural resistance, it's not going anywhere. Also, the more trading and investing books that you read, the more that you will see that the best are always grounded in reality. Reality is simply structure. And when we look at silver, we can see that silver was doing fairly well, but it's just become range bound in between levels of structural resistance and structural support. We've not really got a breakout in either direction just yet. But at least we know exactly and precisely where the structure is. We're not guessing, we're not hoping, we're not doing anything like that. We understand. So we went through gold and silver, as well as Bitcoin, Total, and Ethereum. So what I would just like to say is perhaps pick one or two of these and let me know what you would like to see in the comments on tomorrow's video. A number of people have also reached out for markups on different charts. I would love to do those for you. So stay tuned for future videos. And one of the best things that you could do is to look at this Price Action Masterclass, TA's most advanced method. It's a YouTube video inside the channel. Please check it out. And there are a ton of free resources on CTKSMethod.org. Please check those out as well. And if you found the video helpful, please consider just smashing that like button and also subscribing. And please share this with your friends and family. One thing that you'll read in any book on trading and investing, if you're emotional, you're going to make big losses. Emotions are your enemy. So you want to move from this side of the cartoon over to this side. You want to just get rid of emotion, put methods and processes in play, and embrace reality. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.